So you have the floor, sir.
All right. Thank you so much. Good afternoon, ladies and gentlemen. All protocols duly observed. I respect the leadership of the Institute from the national level to the Adamawa branch level, both current leadership and past leadership. I also celebrate everyone who is contributing actively, financially, time, and otherwise to ensure that this chapter, Adamawa branch, thrives. Thank you for your service. Thank you for your leadership. I'll be taking us through some slides very quickly on the Nigerian tax reforms 2026 key provisions, threshold, and effects on PAYE. Let me quickly say that this session I'm about to start now, or that we have started now, is hinging on a premise. And what's that premise? It assumes that everybody listening to me right now is a payroll professional. What do I mean? It means prior to now, you have been handling payroll. I'm saying this because if you've not been handling payroll, this is not a fundamental payroll class. So we're now saying that we have a tax reform. How does it impact or affect the PAYE? So again, having established that foundation, all right, and based on these assumptions, I'll take a few things for granted. I'm sure you understand what I mean, all right. Having said that, these are some of the 4 key things around taxation that happened to us in the last few weeks, months. It had taken a while in coming, almost 1 or 2 years now. There have been conversations around the review, consolidation, and so on and so forth. I will appreciate if I can be made co-host, or if you can help me mute Gabriel Joda, all right, so that I'm not distracted.
Sorry,
There's
sir. What
somebody
did
that
you
is
say?
on. Please help me mute Gabriel Joda, please.
Okay.
Thank you so much. All right. So the tax law took effect January 1, 2026. There are several components, but these are the key highlights is that we have 4 key tax or tax-related laws that were consolidated. The first one is the Nigerian Tax Act, which consolidates tax laws, updates rates and threshold. Then we have the Nigerian Revenue Service Act. This replaces the old FIRS, which is Federal Inland Revenue Service, and the Nigerian Revenue Service. Of course, they are now merged into a new entity. Then we have the Joint Revenue Board Act, which enhances federal state tax coordination, and the Nigerian Tax Administration Act, which also supports digital compliance, ensures clearer audit and refund rules, and so on and so forth. So with respect to the Nigerian Revenue Service Act, setting, collecting, accounting for due to the federal government. The Joint Revenue Board Act established the Joint Revenue Board, the Tax Appeal Tribunal, and the Office of the Tax Ombudsman to tax matters for the public. The third one, which is the Tax Administration Act, provides a uniform procedure for the consistent and efficient administration of tax laws, making compliance easier for what? Taxpayers, and optimizing revenue collection across
Hello, doctor.
Can you hear us? Like, he has gone off now.
Let's check all gadgets.
We can hear you, but the presenter went off.
They said that one is not working.
The speaker is not working.
Some were very earlier on the TV. So I think maybe could it be from his place?
Apologies.
That's the man in there.
My apologies.
I
From my hand.
Hello, sir.
Gentlemen, my apologies. It's from my hand. The network issue was from my hand.
Okay.
All right. Yeah, those are part of the as related with virtual sessions, but we move on. All right. So the fourth one,
Can you
which is the
increase? Sorry,
Nigerian
sir.
Tax
Can you
Act,
increase the volume from your
consolidate
own
and
side?
streamline. This is the maximum volume.
Oh, that's the
Just
maximum volume. That's okay.
because this is my maximum volume. And if I voice, we even read it even further. All right. So the fourth Nigerian tax consolidate and streamline Nigerian tax laws, introducing tax or measures such as reduced corporate income tax, exemptions for low-income earners from personal tax, and adjustment to value-added tax on non-essentials. So in a nutshell, the tax reforms touches a lot of things. PAYE, which is employer, for example, corporate tax, different things along the value chain. But today, our interest and focus is on PAYE. PAYE means pay as you earn, which is the tax we deduct from staff, from work. All right. So I have to provide that broad overview because tax reforms touches multiple things. But this afternoon, very quickly, we are looking at how it affects us as HR professionals. Maybe we are directly responsible for managing payroll. What do we mean by is progressive? It means the more you earn, the more the tax you pay. The more you earn, the more the tax you pay. Okay, I will stop sharing and start sharing again, but that is not from my end, but just to be double sure. Okay, so you can also log out and log back in. It may also help. All right. But if you can see my screen, you can just say yes or something in the chat box just for that. Okay, so now we also have what we call rent relief. Okay, so what we are doing right now is we are looking at some of the changes or modifications to the PAYE according to the new tax law. So we have what we call 20% of annual rent at what? 500,000 naira. That's a relief. Remember that in the past we have what we call CRA. CRA is what? Consolidated Relief Allowance. That has been taken off. We no longer have CRA anymore. What we have now is what? Rent relief. Part of also the changes is that individual filing is now mandatory, regardless of whether your employer files. You as a person, as an individual employee, you also need to file. Again, part of changes based on this new tax law is that there are stricter enforcement for non-compliance. For example, a 10% penalty plus interest, which will be determined by the prevailing central bank interest rate. Then digital compliance, e-filing, e-invoicing, and a single thing system mandated. All right. It means tax identification number. Tax identification number. So intentionally, I sequence this presentation that it will look like I'm repeating things. I am repeating intentionally so that it can sink in, so that we can get it, so that we can flow. So that if you don't get it the first time, you get it the second time. Now, this slide that I'm showing you now is almost exactly as the one before, but with more details. You remember that this afternoon, I told us is progressive. The, the tax you pay. Look at this triangle, all right, or this triangular-like shape. You see here, for the first 800,000 naira, you pay zero tax. You will notice if you have been following the presidential, the coordinator or leader, I've forgotten his designation now, the person who is in charge, I think Mr. Taiwo also, of the presidential tax reforms that favors the low income and it is true. This is not, I'm not a politician, I'm not supporting any party. It is true. You will see here that anybody who earns 800,000 naira per year, no, not per month, per year or less, you pay zero tax. Now, the next 2.2 million naira per annum, you will pay what? 15%. So which means the first 800, you are not paying tax. The next 2.2 million, you pay 15%. The next 9 million, you pay 18%. The next 30 million, you pay 21%. The next 25 million, you pay 23%. The next 50 million, you pay 25%, which means the more you earn, you can see from 800,000, okay, the tax begins to increase from 0% to 15% to 18% to 21% to 23% and 25%. If you don't like maths, stay with me, you will get it. It's not rocket science, okay? Stay with me. Again, looking at some of the changes to the some of the changes, all right, to the personal income tax. So I saw a question on the chat which is asking that what are we to file? So normally at the end of the year, for example, at the end of 2026 or at the beginning of 2027, maybe January, you are supposed to go online and file your tax returns. In other words, you say this is how much I earned in 2026. That's what we mean by filing. Already today, in some states, they do filing. For example, if you're in Lagos State, employees file. Okay, some states already do that. But it's a simple process. You go to the website and say, oh, I earned 5 million naira in 2026. I earned 1 million naira in 2026. So they can now determine and judge whether you are under tax, over tax, as the case may be. Feel free to drop questions, all right? And feel free to also respond to questions if you also know the answer. I know it's a sharing session, and anyone can also contribute support in responding. So some of the changes to the direct tax, you will see here, tax exemption for minimum wage earners, lower for lower income earners, and progressive tax for higher income earners. This is what this picture, this triangular picture, is showing in naira and in percentages. Same tax boundary without consolidated leave allowance. Remember, in the old PAYE structure, we had CRA, consolidated relief allowance. This has been taken out. This has been eliminated. No longer applicable. What is now applicable that we can call a relief is rent relief of 20% of annual rent paid, subject to what? A cap or a maximum of 500,000 naira, or whichever is lower, provided that the individual accurately declares the actual amount of rent paid. You can see documentation here. The last thing is filing of individual tax reform is now mandatory for every taxable person. This is regardless of the returns to be filed by the employer. So you see here, please stay with me, ladies and gentlemen. I'm doing this so that we get it. You can see the same thing we said here or presented here, we also presented it here for clarity, for accumulation. Are we together? Now, you will see that what you are seeing on the screen right now is also very familiar. I hope all of us can see the screen, and those of us who are in the physical auditorium. Now, let me very grand. So, why do we invest 1,000? What here is a step. Don't try and how did you calculate to know in the tax reform, the tax already puts this fee and this percentage. So don't bother about the derivation. See it again. First 800,000 per annum, 0%. Next 2.2 million, 15%. Next 9 million, 18%. Next 13 million, 21%. Next 25 million, 23%. 450 million, 25%. So the higher earning people will pay more. Now, I won't show us the tax schedule. Let's now look briefly at the allowable statutory deductions for PAYE. Allowable statutory deductions for PAYE. Again, this will be familiar for those of us who already do payroll historically, which means using the last PAYE framework, you are doing payroll, everything here, nothing will be strange to you. The only difference is the fact that CRA, which is the Consolidated Relief Allowance, has been removed, but has now been replaced with what? Rent relief. I hope you are following me. Remember that currently and statutorily, the pension component of the employee emolument is not taxable. And what's the pension component? Typically, most of the time, 8% of basic housing and transport. I've seen some instances where some people do 8% of gross. So depending on what works in your organization. But at the minimum, to the best of my knowledge, based on my practice, it is 8% of what? Basic housing plus transport. That portion of the employee salary or emolument is not going to be, but that has always been the case. So it's not new, but it is still retained. Also, the something we call voluntary pension. The first word in this phrase is what? Voluntary, which means it is not by force. It is not mandatory. In fact, many people are not doing it. But if any staff or employee says that, oh, HR or management, please, this pension that I am paying, I want to add to it by myself. Anything that you add to it above 8% by your own free will becomes voluntary. So let's assume that the mandatory is 8%, and then the employee says, okay, I don't want to be doing 10, I want to be doing 10%. Of the 10% pension, 8 will be what? Mandatory, 2% will be what? Voluntary. That extra or that additional 2% will also not be taxable, which means that government is saying anybody who is deciding to save more into their pension voluntarily, they will get a tax relief for that, which is also what it obtains now. Nothing has changed. Then we also have life insurance premium. So if, for example, you have a life and you pay maybe annually, of course, there must be evidence that you have paid the premium, and then you provide the documents to HR, which may be us in this case, or to the relevant authorities. Life insurance is also not grant you a relief. The next one, which is the new one or the inclusion, something that is fresh that we did not have prior to this tax reform, is the rent relief, which is 20%, okay, of rent paid or a maximum of 500,000 naira annually. So you will see that there is a cap here. Other things that may apply normally, will include National Health Insurance Scheme. So if you are contributing from your salary to NHIS, okay, the National Health Insurance, that portion of your money that is used for that NHIS will also not be pensionable. The next thing I will do now is that we will now use specific example in Naira. So I see my brother, Sir Emmanuel, here saying, what if your remuneration, there is other allowance and meal subsidy? Is it also included? Thank you so much, Sir Emmanuel, for that question. Again, what we have now, okay, all incomes are what? Taxable. Let me say this again for emphasis. All incomes are what? Taxable. In fact, benefits in kind is what? Taxable. Let me give you examples of benefits in kind. So maybe they give you a driver or they give you a cook. Is a benefit in kind. They will calculate the monetary value of that driver or that cook, or if they give you official car, and then they will tax it. So that answers your question, because whether they are giving you meal or either they are giving you the food in the canteen physically, or they are giving you allowance for the food, as long as it's a revenue to you, is an income. Your vision, life insurance premium, if you have, and if you have the evidence, the rent relief and national health insurance scheme. I hope that clarifies your question. I said, my brother Etini Akpabio saying that for employees whose house rent are being paid by the employer, what's the formula for computation for benefit in kind for the category of employees? The formula is the same thing, which is what? 20% of rent up to a maximum of 500,000 naira per annum. Don't forget that when rent is paid, that is for evidence rent. In a worst case scenario, in case somebody says, so my landlord doesn't give me receipt or something, there will be evidence of payment. Please don't tell me that you pay your rent in cash. This is 2026. So there may be maybe like a bank transfer, application, rent for 2026, as the case may be. All right, so there will be some form of taxation. It can be an agreement between you and the landlord, or that as the case may be. Brother, I hope that also provides clarification. So income is what, including benefits in kind. So if you pay your house, you eat benefit. All right. So parents, if you think about statistics, to impact on the benefits in kind. So we're just doing this is a statistical number, just to the number. And, actually, I know that the senior people, so just this is entry level director will be offended. Take any, nobody should take offense, please. So let's ask that this person is in 1 point. From your hand, please. My apologies. All right, I'm back. I hope you can hear me. Apologies, the internet disruption was from my hand and not your end. I hope you are still together. Thank you for staying with me. So back to the scenario A, and I'll use a couple of scenarios just to help with assimilation and understanding, and for clarity, for our sake, all of us. So look at this. This person is earning 1.2 million, and then the person is paying a rent of 850,000. In reality, you know that this is suicide. How can your salary be 1.2 million and your rent be 850,000? that means you are working for your landlord now, or you are living above your means. Maybe you are renting government house instead of living, or you understand where I'm coming from. But again, because it's hypothetical, let's look at it. So the first thing is deduction. We have earlier provided the framework. The first one is what? Pension. Pension, 8% of 1.2 million. That is 96,000 naira. Rent relief is 20%. What's 20% of 850,000? Let's say 170,000. So the total deduction here will be 96,000 plus 170,000. This total here means the total relief you can get. In other words, this portion of your salary tax will not be applied to it. It will not be applied to the pension component. It will not apply to the rent relief, which is 20%. Now, what do we mean by chargeable income? Chargeable income means the portion of your salary that government or HR or management can and should apply tax to. In this case, how do we get chargeable income? Chargeable income is your annual gross minus your possible reliefs. Annual gross here is 1.2 million. Possible relief here is what? 266,000. How did we arrive at 266,000? In this illustration, we added 8% pension plus rent relief. All right. It's very easy. It's very clear. I hope we are together. So now, we now want to calculate our tax. How do we calculate our tax on the chargeable income? 1.2 million minus 266,000. So our tax is applicable only to 934,000 naira out of the total 1.2 million. I hope somebody is still with me. All right. So which means that this example we are using for this scenario A, this person does not have life assurance. Many people will not have. This person is not doing NHIS. You get. That is why this is the applicable deductions. If the person was doing group life assurance, assuming it is 50,000 naira per year, and they give us receipts, then we will add that 50,000 naira to the rent relief. It will be 66,000 plus 50,000. Do you understand? So don't invent anything. What is not available is not applicable. What we cannot provide documentation, and people cannot come and use mouth to say, I am doing is this amount. Don't forget that there are registered insurance companies in Nigeria. Many of them too are in Adamawa. So anybody who is doing a premium, a life insurance, will provide documents from the insurance company which can be verified and validated. So please, it's not a trust me, I am doing group. No, this is not a trust kind of thing. It's evidence-based. So step 3, we are now applying the tax. Don't forget the tax law. Let me take us 2 or 3 steps backward intentionally. It's part of the flow. Look at how do we calculate our tax. The first was 800,000 at 0%. The next 2.2 million at 15%, just to refresh our memory and so that we can flow along. So how much does this person have now that we can tax? 934,000. That is why we are looking at only the first 2 areas, because if you look at 934,500, the change, it will fall into the second bracket, 2.2 million. Do you understand? Please talk to me. I'm your brother, I'm your colleague. Don't be ashamed. There are no foolish questions here. We are family, CIPM family, HR family. It's better we ask any question here and we correct ourselves or we guide ourselves so that we answer any question.
We are flowing with you.
So,
yes, we understand.
Thank you so much. Thank you so much, my people. God bless you. Thank you. So moving on. So the first 800,000 will be what? 0%. So that means we're not going to take tax. That's why there is what? 0. Now, because 934,000 minus 800 is 134. Because this is in excess of 800, you are now in the second category, which is 2.2 million. 2.2 million or less is charged at 15%. So we will now calculate 15% of 134,000, which is what? 20,100. This is this person's salary for a year. The person will annual gross. So the annual tax for this entry level hypothesis is 20,100. How do we get this the pension? I'm sorry, the taxation or the tax for a month? 20,100 by 12. Divided by 12, it will be 1,000,000. I'm going to go to another scenario and explain exactly the same flow again, just in case some people still don't get it. And don't feel bad. There's nothing to house. Now, this is scenario B. In other words, another example. This person is earning 8 million naira annual growth per annum. Again, because it's hypothetical, that's why I'm using big figure for the rent. The rent this particular individual is paying annually is 4.5 million. Now, this particular employee has VPC. Let's start VP. Anybody, or you can type it too. I'm just testing our knowledge. You can type it or you can unmute and speak. My online colleague, tell me, I've said it today. What does VPC mean? Okay, good. Thank you so much. And
Voluntary
thank you,
pension
Sir Chris.
contribution.
Thank you, Madam Gladys. VPC means voluntary pension contribution. So, which means outside the statutory pension, which is 8%, this senior manager has told HR or management or account to say, please, so out of my salary, please remove 120,000 naira and add it to my pension voluntarily. It's me, it's my choice. I opt for it. Maybe I want to save this my children. I don't trust they will remember me when I'm old. So let me do more savings. It's hypothetical, please. Now, the first thing we do is we calculate the deductions. Deductions here means the things that we will not apply tax to. Deductions here means the things that we will not apply tax to. Then we say 8% of 8 million. That is for the mandatory pension. That's 640,000. Then the voluntary pension, 120,000. You know how we got the voluntary pension? It was the staff that wrote us that we should be deducting this as voluntary pension. So when you are doing voluntary pension, make sure that the staff either filled a form or wrote a letter so that you can print that letter as part of your document before somebody will say you are the one who just decided to be deducting their money. Don't let anybody use mouth. Oh, there must be evidence. Then this staff also has life insurance. In this instance, is 350,000. And then there is what? Evidence from the insurance company, which is registered with the National Insurance Commission, NICOM of Nigeria. Now, the last one, which is the rent relief, don't forget, is 20%, okay, which is also as a maximum. In other words, nobody's rent can be more than 500,000. We don't care whether you are living at Aso Rock or you are living at government house in Yola. If you be living in London, it is not anybody's business. The maximum is 500,000. So even though this person is paying 4.5, so we can't take more than 20% of 500,000, which was, and this is what lower, 500,000 in this case. So the total deductions is, so you add 640,000, 100,000, 350,000, 500,000, and it adds up to what? 1,610,000 naira. Next step, so we have calculated how much that tax cannot touch. We now want to calculate how much can the tax touch. This is what? 8 million, which is the gross income, annual income, minus chargeable income, which is 1.610 thousand together. So we now arrive at 6,390,000. Now we want to calculate our tax on 6,390,000. What do we do? Let me cause 2 or 3 steps back intentionally. This is our income tax band as provided by the tax schedule in the 2026 or 2025 tax reform implementable effective 1st of January 2026. First 800,000, 0%. Next 2.2 million, 15%. Next 9 million, 18%. I won't go further because it cannot be you are we to understand. Now, the first 800,000 naira is what? 0%. So you won't pay any tax on your first 8 from this 0.3. Next 2.2, you pay what? 15%. So then we had 800 to 2.2, the change of 3,090,000, and then we apply what? 18% tax. So total to be 0 from the first 800,000 plus 330,000 from the next 2.2 million plus 610,200 from the next, minus this and this, minus 0.2. That's what gives 3,390,000. So the annual payee of this entity, which is in this context, is 940,200. What is the monthly payee? That gives us 70,350. So just to put some of these things in context, but still explain the same concepts again, just for understanding. So this is like using an Excel sheet format. All right. So in this hypothetical example, now what I'm showing us here, so that we get it, people stay with me. So I want to show us the current tax law and the former tax law. That's what I'm showing us right now. The current tax law and the former tax law. Stay with me, please. Pay attention. I hope we can all see this screen. Now, if you look at current computation, current should be past. Okay, this current here is for the old one. In old one, you have 300,000, 7%. Next 300,000, 11%. Next 500,000, 15%. Next 100,000, 19%. Next 1.6, 21%. Over is 24%. This was the old one. This one now is in which is first 800, next 2.2, next 9 million, next 13 million, next 25, and so on and so forth. So if we put the same salary into the two contexts, you will see a basic salary 7.5 million. Housing allowance, 1.5 million. Transport allowance, 1 million. Entertainment allowance, 1 million. I'm happy I put this example because somebody also asked that, that we should use example with vehicle, all those kind of things. So, different organizations, especially in the private sector, you can have any allowance that you want. In government, there are also plenty. You can have hazard allowance, dressing allowance, education allowance, furniture allowance, anything. It doesn't matter if it is 200 types of allowances. You just be adding them. But all your allowances and your basic housing and transport will sum up to what? Gross. So this person's gross is 15 million. So don't stress yourself. It doesn't matter the number. If you like, have a farming allowance, have grandchildren allowance. It is okay as long as it's approved. But all incomes are what? Taxable. The things that cannot be taxed, we have enumerated there. Pension, voluntary pension, life assurance, national health insurance scheme. Apart from that, and then the rent relief that the tax reform has, in quote, permitted. So you see here, 15,000. In the past, we used to have what we call CRA, Consolidated Relief. But in our current reality, we don't have it anymore. What we have now is what? Rent relief, which is 500,000 naira or lower, using 20% of from the formula, and so on and so forth. Then you apply. So what you do, if you are good in Excel and or formula in the Excel sheet. And if you are using ARE, it means enterprise resource planning. You are using all this software, maybe Oracle, Microsoft Dynamics, Sage, and if you have, anyone, they use it in like Lagos government, they use I think SAP or Oracle. Different governments use different QuickBooks. All of them different, but they have similar functionalities and do about the same way. So again, you apply the tax law, and then it gives you your effective tax rate. And if you're in Excel and somebody is very good in Excel,
Hello, team members. Can you hear us?
We can.
It's like he has gone off. Let's give him a few minutes to come up.
Dear audience, just to inform you before he comes on board, this training is free, but of course there will be certificates. So anybody that is interested in certificates to contact us thereafter. That one goes with money. So please just take note if you need the CIPM certificate. Welcome back, Doctor.
My apologies, people. My apologies. I apologize on behalf of all the networks. I'm using 3 networks here.
Okay.
3 networks. Yeah. Just
Go ahead,
take it
sir.
as it is. All right. Okay. All right. So again, still using another Excel framework to explain the same thing, just to highlight it. So this is an Excel sheet. So people can actually help you create the Excel sheet and share it. And then you just understand it and you are using it. Or you can learn Excel and be able to do it. So using this example here, you can see in this Excel. So what I did was I copied from Excel and put in PowerPoint. You understand? So that I'm not running through different sheets. You can see here, annual salary, 3 million. Monthly salary. All these things have been like formularized. Okay. For example, in this column, you just put this divided by 12. So that once you change the annual salary, the monthly salary will change by automatically, because there's a formula that divides this by 12. Now, these are the possible deductions. Pension, okay, 8%, NHS, National Housing Fund, that's also deductible. If you are doing National Housing Fund, you also add it. You can't deduct that from you won't charge that portion that goes to NHF, National Housing Fund. You won't charge it to tax. You understand what I mean? But not everybody is doing National Housing Fund. So in case you are doing it, that's why I'm also using this example so that I don't forget any type of relief. All right. Then life insurance, if applicable, in this instance, the person doesn't have, it's not by force. Rent relief, 500,000, the percentage is 20%, and then you calculate it. Then you get your total taxable income. So this person is earning 3 million. By the time we remove the pension, we remove the national health insurance, we remove the national housing fund, we remove the rent, the total is 475,000, and then amount that we can tax is 2,525,000 naira. Then we now apply the formula from the tax schedule. You see here, first 800,000 naira, 0%. So the person's money is intact. The next 2.2 million, 15%. By the time we take 15% of this money that is left, is what you see away. 15% is 285,000 naira, 750. That's total tax. Then what are the annual deductions from this payroll? The person is paying personal income tax of 285,000. The person is doing pension and so on and so forth. Then you now have your total annual net income. You have your total net income and so on and so forth. So it's just the same thing that I've repeated multiple examples just to drive home the point. Just to recap, and then we take any additional questions or comments or contributions. Don't worry, this is the first month of implementation, and I'm saying this with all sense of respect, and I can say from a sense of authority. There may be a few mistakes here and there. I'm sure even the Revenue Service would not be too hard. Let me use that word. They will know that there will be mistakes. I'm not talking about intentional fraud or something, no, because this is the learning curve for them, for all of us. And so in the next 2, 3, 4 months, things will get better. We'll have better clarity from an implementation perspective. We will correct whatever mistakes we may make. That's not to say we should go and make mistakes, but I'm saying nobody should fret in case, there is a shortfall or a little excess here and there. Don't forget, rent relief cap, manage expectations for high earners. The highest is 500,000. It doesn't matter if you are living in Aso Rock or living in a state house in Yola. Voluntary deductions, so these are the additional things, say, I want to manage my tax, I want to reduce my tax. Voluntary pension contribution is a tool, but if your current salary is not enough to meet your needs, are you able to save more? That's another story for another day. Then if you are doing insurance, it will help reduce chargeable income, but don't forget that you will pay the insurance premium, all right? Documentation is critical, very key. Rent receipts or evidence, insurance certificates, pension proof may be required. Then individual filing mandatory. So generally, it will be by the 31st of March. So for 2026, it will be 31st of March 2027. Okay, because if you are doing for 2026, all right. So again, for many of us, even state level local government, we may be already using one form of software or the other. If you are using software, either your IT person or you work with the service provider of the software, work with them so that they program the software appropriately with the tax schedule, with the tax reliefs, and so on and so forth. Because many people who use software, you don't manually calculate payroll anymore. But if you make a mistake in how you configure the software, it will perpetually be making mistake until it is discovered and corrected. So please, let's, as much as possible, pay attention to compliance, because there are penalties for non-compliance, as the case may be. As I wrap up, HR payroll implications, let's update our payroll for the new personal income tax threshold. Let's review contracts and benefits. So please, any offer letter you are doing now in 2026, our offer letter before, some of us will have put, this is the tax, and you specified it. If you do that in your organization, you need to update it with the tax schedule in the new payroll. But some of us didn't put it. They just say, in line with applicable tax law. That way, you don't need to be revising, because applicable means anytime the federal government rolls out a new guideline, which is binding on all that are living residents in Nigeria. Then this third one, okay? So I know in different organizations, they pay on different dates. I'm checking my calendar. So today is 24. I am aware some people have been paid already. When I say some people, don't forget that organizations pay differently. So some people, they pay maybe on the 22. Some people pay on the 25. Some people pay 28. Some people 31. Some people pay in the next month. So for example, January salary, maybe you get like February 3rd. Please, especially by now, most likely, irrespective of when you pay, you will have run the payroll already. you will know that some people's salary is increasing. Some people's salary may reduce, as the case may be. Please, I want to encourage us, even if it is like a 30-minute town hall session, just enlighten your team, your staff on some of this, like this enlightenment session, CIPM Adama chapter has gracefully set up for members of CIPM Adama and, of course, other CIPM members who joined outside Adamawa. I can see a few people outside Adamawa here too. Let them know. You know why? You don't want people to receive alert or salary and they will be shocked or they will be surprised. Please, that's part of communication management. So let them know upfront so that people can manage their expectations. Also prepare for audits and digital reporting. Audits, one of the things you need again is the necessary documentation. If you're a business owner here or you're a consultant, you want to conduct an impact review, so we want to identify the exemptions we've highlighted in this conversation today. We want to also update your HR and your payroll systems or your ERPs. You want to train your HR and your finance team. Payroll is not just HR, there's also finance component. And you want to establish any tax risk register as the case may be. So, ladies and gentlemen, this is how far we will go today. I've tried to be as simple as possible. I sincerely hope that everybody in the auditorium and on the call really found this very useful. These are some resources. NRS, that's National Revenue Service. That's their website. It's federal government, you can see. This is also a digital resource. If you click this PAYE calculator, it will help you calculate maybe for your own salary. All right, it's a digital link. All right, then for PenCom too, this is the PenCom website in case you also want to explore more. This is my contact details. You can follow me. This is my phone number. You can call me anytime outside now. This is my email. You can also mail me anytime. If you are not following me on YouTube, I encourage you to. I have 560 HR webinars on YouTube. Just go to Niemi Adeosun, subscribe, follow. You can watch any session. Even if the branch, if they share the recording of today's session with me, I will also upload it on the website because I don't like doing the same webinar twice. All right. Thank you so much. I must appreciate our chairman. Thank you so much, Sir Emmanuel, for the privilege and the opportunity to come share with highly cerebral, intellectual, committed CIPM members and HR practitioners at large. Thank you so much. I would like to call on the moderator.
Thank you so much, Doctor. Before we go into our vote of thanks, let's listen to questions. Maybe we'll start with online. The people in the auditorium will be getting their questions ready.
Good afternoon, everyone.
Good afternoon, sir.
Okay, sir. Thanks so much, sir, for the wonderful presentation. God bless you, sir. Please, I put a question on the chat something, but you didn't answer, sir. I just want to ask about the minimum wage. We all know that the new minimum wage is 840 per annum. Are we saying, and it's been like they are not going to tax anything the new minimum wage, but I'm having more than 800. Are we going to tax the 40,000 as you have explained, sir? That is just my question, because per annum is 840. So when we remove the first 800, it's remaining 40,000. Are we taxing the 40,000?
So let me explain this to you. Please follow me. Don't forget that when we are doing taxation, we first of all identify the things that we are not going to tax. Please follow me, sir. Sir Oluwasegun.
Yes, sir.
Now, this person that is paying 840,000, is the person paying pension, sir? Yes,
no,
the
sir.
person is
Okay.
paying pension.
Okay.
No, if you are a staff, you are paying pension.
Okay, sir.
Do you understand? If you are paying
Yes.
pension, we will remove the pension component from the money. By the time we remove the pension component, there will be nothing to tax. Is the person
Okay.
also not going to be paying rent?
Yes.
So by the time you remove the pension and the rent, let's even remove the other thing. So anybody who is on minimum wage, chances are the person will not pay any tax. You understand?
Okay, sir. Okay, sir.
Thank you,
Thank
sir.
you. Sir. Thank you.
Okay, I see another question here from my sister, Sister Taiwo Inyang. So she's asking here that confirm that pension deduction can still be based on basic housing and transport and not necessarily on 100% of the pay. So the answer is yes, it can still be on pension, housing, on basic housing and transport. And the reason is, so you will know them, I'll mention them, they are a public organization. NECA. NECA means Nigerian Employers Consultative Association. So it's the organized private sector that interfaces with government and stakeholders. So before now, they had approached the tax authorities to say, look, in the pension reform back then, it just said 8% of emolument. It wasn't very clear. Is it total emolument? Is it this and that? And they showed different scenarios that the burden of pension payments to the employers will be huge if it is mandatorily on total emolument. And they had an MOU with the tax authority that basic housing and transport is good enough, but not below that. However, for organizations who can pay pension based on total emolument is fine. But note, if you are paying based on total emolument, it also means that the employee contribution will also be based on what? Total emolument. You understand what I mean? Which means the person's take home will reduce because they too are paying a big 8% on total emolument, not based on basic housing and transport. So if you are doing BHC, for now, you are safe. I hope that clarifies, Sister Taiwo. Okay, I'm just checking again. So if you have a question, you want to ask it by voice, please go ahead, while I'm also checking the chats here in case anybody has dropped a question I may have missed. So I see a question here, Sheyi Olulade. Group life insurance has nothing to do with PAYE, nothing to do. Group life at a means is the organization, the company, or the ministry that is taking the insurance on behalf of all their staff. The life assurance is a personal insurance that a person, an individual takes. So, for example, I am Oluyemi Adeosun. I go to any of the approved insurance, say I want to do a life insurance that in case I die, my dependents should take it. That is personal. Group is for every. So if you are in Ministry of Agri, everybody in Ministry of Agri have a group. If you are in Coca-Cola, Nigerian Breweries, which other organization? Access Bank is for everybody. So PAYE is pay as you earn. You don't use a group life insurance, which is for everybody for an individual. No, it is not applicable. Thank you for your question. All right. I think we can go to questions for my colleagues in the house, if any.
Okay. Thank you so much, Doctor. The first question is where you have other incentive like a productivity bonus that does not go through payroll. So how do you handle it when it comes to taxation?
To be very honest and clear, let me reiterate. If you are not doing, permit me to use this word, chua-chua. Those of us who speak Hausa, you understand what chua-chua means. If you are not doing aki-panki, all incomes, let me say it again, all incomes are taxable. It doesn't matter whether it is through payroll, off payroll. But maybe if you do it and the regulators, they don't catch you, well, but one day they can catch you and they will tell you that the thing you did in 2021, you got 1 million naira bonus, come and pay tax with penalty and interest. So if we are doing the right thing, and this is a professional context, we teach the right thing, all incomes, leave allowance, taxable, bonus, taxable. There is nothing, as long as the company is paying you, that is not taxable. That's why benefits in kind, let's say you're a director, they give you driver, they give you house, they give you cook. There'll be a monetary component of all those benefits. I wanted to say blessing. All those benefits that you are getting, it will be what? Tax. Please take note. If your company is not tax, there are some organizations, the employee may not know they are paying the tax because the company has decided to bear the burden of the tax on their behalf. That's possible too. So the company can say, okay, take this money, the tax part we paid for you. That's a management decision. But the government must get their tax on all incomes. I hope that clarifies. Thank you for that beautiful question.
Thank you so much, sir, for the clarification. The next question, I work in a manufacturing. We have the junior staff association union. We have the senior staff. That's the junior we call it NUFBT, and then the senior we call it FOPTOP. So the junior just last year they stopped gratuity. So and a part of the agreement, they now said the employer should increase the pension contribution by 2%. And by the pension law, we have 8 and 10%. So what happened to the 2% that the association or the union is now saying they should increase it? So what happens? Will it be taxed or will be tax-free?
I will answer the question very easily. That 2% will be tax-free because technically that 2% can be treated as voluntary contribution. The voluntary contribution, there are two sides to it based on this specific scenario you have painted. Normally, who does voluntary contribution? It is the employee. But I have a feeling that based on this collective bargaining agreement, that 2%, it means the company, instead of paying 10%, is now paying 12%. Am I correct? If that is the scenario, it is still a voluntary contribution. It is just that is now the management that is doing the 2%. So it doesn't matter where the voluntary contribution is coming from. It is tax exempt. Okay, Emmanuel, I see your hands, please.
Yes, sir. Yes, sir. So I still have a colleague that want to ask you a question so that we round up.
Thank you, sir. I'm available for us here.
Thank you so very much, Doctor. My name is Jordan Selsi. I want to ask this question. Recently, of course, the new tax law commences in January 2026.
Yes,
and
sir.
of course, most people are not knowledgeable on this. You can see even from the audience here, we are eager to learn. We want to know what is going on because of stories we've been hearing from colleagues. What I want to
Yes,
ask is, of recent, I've received text messages and calls from friends that, don't send money into my own account because the new tax law means that every single penny that goes into my own account will be taxed. Whether is coming from my employer or is not coming from my employer, any money that goes into my own personal account, it will be taxed. And I don't want that. The money you are sending to me will probably not be my own. Maybe you are sending it to come and give my mother in the village or thereabout. So if you must send money, just use the narration that some will tell you child support, mother's upkeep, birthday, burial, something, anything, they just want you to give it a name that would not look like is an income that is coming for them, which they want to avoid that tax. How reliable is this stories? Is it true or any income that actually drops in my own account is taxable? Thank you.
Thank you so much. Even though this course today is focused on PAYE, your question, very valid question, is slightly out of scope, but I will attempt it. I just wanted to point it out, but it's a very good question because it's tax. You understand? But this is not management or HR paying staff. This is individual, but we are all the same. Now, let me say this. Generally speaking, I think it is even a good practice to put narration for your bank transfer. Even for yourself, ignore tax authorities so that tomorrow you want to say, oh, how did I spend my money in 2025? You can check your online bank statement or ask for a physical bank statement. It is those narrations that will say, okay, I gave 5,000 naira to support somebody's naming ceremony. I gave 10,000 naira to support my brother's operation. I gave 2,000 naira for my son or daughter. So please, I agree that put narration. There is no sanction for putting narration. However, don't forget that one of the things I highlighted in today's presentation is that part of the new mandatory requirements is that in addition to the filing done by the organization, employees too will do their own individual filing. And you are going to state in your filing that this is how much I earned in the year. So I'm just saying, this is hypothetical. Imagine in the year you earn 2 million naira. That's your total salary. But in that same year, you got gifts up to 5 million naira. Well, the truth is, how much are you going to declare? Because everything that entered into your banking there is what we call auditory. You know, if somebody sees you and gives you 500,000 naira cash, except the person that gave you, nobody knows. But if it is paid to the bank, there's an evidence. The truth is, the National Revenue Service have the right to say, Mr. Oluyemi Adeosun, Dr. Oluyemi Adeosun, last year you paid 200,000 naira as tax. And 200,000 naira is reflecting, it should be for 4 million naira. But we saw that you got 30 million naira. I will now need to come and be explaining how my grandmother died and how sold Ashwebi for the death of my grandmother. And then people started paying money for the Ashwebi. I'll have to explain. Now, if my explanation is reasonable and there is documentation to back up the explanation, they can let me go. If not, government can say, Oluyemi, go and pay an additional 500,000. Go and pay an additional 1 million. So one of the things this tax law is doing is greater accountability, even for we individuals. So please, if possible, if you are aware that somebody wants to send you money and you are aware, tell them to put the appropriate narration. Whether it will be used or not is immaterial. But the government in future will have the right to say, come and explain how you earn 15 million naira in 2025 and you only paid 50,000 naira as tax. Are we together? Thank you so much, sir. We have some online.
Thank you so very much, sir. We appreciate it. It's well understood. It means we need to declare all our income. Tell all our associates to please put narration anytime they are sending money to us. I want to believe you will agree with us that child support, concubine support, and the rest of it.
Sir, if you are in a Sharia state, don't put concubine support. Oh.
Hello, sir.
Anyway,
you can't put side chick support.
yes, I think yes, that's the right narration. Side chicks support. Well,
I have a question. Hello, I have a question.
Okay, please, that will be the last one.
All right, thank you. Morga, I heard you, sir. Thank you very much for an insightful session. It was really awesome. So what I'm asking is to also get more clarification on the benefit in kind that I ask. I know that the benefit in kind, when you want to tax the benefit in kind, that you would need to, apply the tax on the either 20% or 500,000, whichever is higher. I don't know. So what I want to know, sir?
That's only for rent, please.
Okay, yes, I'm talking about rents that employers paid on behalf of the employees.
Yes.
So does that mean that after charging the 20% or the 500,000, we would need to subject whatever amount to the tax table, or how do we apply tax on that benefit in kind?
So, I think so that you are not confused. You know that in this your own example context, it is the company that paid the rent. So because the company paid the rent, the staff cannot come and claim a relief on a cost.
It's not relief. It's not relief. There's a tax on benefit in kind. that employee will need to pay.
Antini, stay with me. Stay with
Okay.
me. I've not finished the conversation. Allow me.
Okay, sir.
You know,
Okay,
I'm
sir. Thank
responding.
you.
I must respond to what you are saying and what you are not saying so that there is clarity.
Okay,
The
sir.
first thing, that you didn't ask a question doesn't mean it is not a question. I need people to know. So if it is the management that paid for the rent, you
Yes,
cannot
sir.
use the rent as a relief for the staff because the staff didn't pay it. That's the first thing. The second
Noted,
thing
sir.
is when you are doing taxation on benefits in kind, generally speaking, you monetize the benefits. And whatever the true or fair market value of the benefit is what you tax on from a general tax perspective. So the same rule of 800,000, 2.2 million, and so on and so forth will now apply. I hope that clarifies it.
Okay. Okay, sir.
Yes, that's
okay,
all.
sir. So it will be meaning that it will be subjected to the tax table. So are we going to? Yes. Would that computation be done separately on the benefit in kind, or it will be added to the employee's salary and then the tax table is applied holistically?
For it to be complete and holistic, you can put it in the, so that if it's, for example, in the pay slip, you know, you have your total reward statement. It can be on the same document. But if you want to partition it, is okay. As long as you apply it, you understand. It doesn't matter. You can have it on the same total reward or pay slip or separately. As long as you apply it correctly, it doesn't matter.
Okay, sir. Hello, sir. Please,
Thank
before
you, sir.
we go, please, hello, sir.
Yes, please.
Yes, sir. And before we go, I'm sorry, sir. These bonuses, leave allowances, and some benefits like that. Who does the taxing? Is it the HR or the tax people?
So it
Please,
depends on who is
doctor,
handling
we are
payroll.
taking over the mic after this person.
Yes, I relinquish the mic. I won't even answer any question again, sir. Time is up. Yes, sir.
I've been waiting since I'm waiting for you to give me order to talk. You didn't give me. That's why I kept quiet, sir.
Talk, sir. Talk, sir.
Okay.
Please, sir.
So on my own question here is that this percentage that you tabulated from 0 to 25%, is it, for example, now you are earning for the whole year is just 1.2 million, and maybe in the next 2 years there is nothing like promotion. Does the money stand as an annual, or the charges stand as an annual for a particular staff that they will charge him this particular percentage, or it is continuous? Because from here you said first 800,000 is 0%. So is this first 800,000 is for annual, or it is a continuous calculation that you are going to add this particular 800,000 on top of the incoming allowance that you are earning, or this particular amount is just for a year? If it is just for a year, I understand, but if it is continuous that you are going to adding this particular amount on top of what you have, is what I don't understand. Thank you, sir.
It is for a year, sir. All the income in the year, is for a year, sir. They are correct. Then on the bonus question, it depends on whoever is handling payroll currently. So if it is HR continues to apply the tax. If it is finance or accounts, same. Or if it's a combination of HR and accounts, they collaborate, review, and they all sign off. All right. Thank you so much. I've enjoyed this session very well. It was quite engaging. I know this kind of topics, you can continue to talk, but this is CIPN. We work within time. I hand over to our moderator in Yola. Thank you so much. I'll put on my